Hello good people, welcome to Certified Business Solutions, where we discuss about business related matters and we give advice to business. Today we want to discuss about two school of thoughts. There is one that says that using your own money to fund your business is better, and there's another one that says that if you use borrowed money to fund your business is better. So we want to discuss and to see which one is better between the two and why. Stay tuned. How are you, Dr. Kamau?
I'm fine, thank you, Lucy.
Welcome.
Yes, asante sana.
Yes, what do you think about the two school of thoughts?
Yes, whether using borrowed money
Yes.
is better than using your own money to fund the operations of your business.
Yes.
There's something in finance called tax shield. Tax shield.
Okay.
Yes, like something like a shield.
Yes, I understand.
Yes, what that means is that when you borrow money, the interest that you pay to the bank on that borrowed money is tax deductible.
Okay.
Yes. So, for instance, if your profits for that year was about 1 million,
yes,
but again, because you had borrowed money from the bank, you are supposed to pay interest on the money that you had borrowed from the bank of about 500,000.
Yes.
So that year, instead of reporting net profit of 1 million, you will also say, I had borrowed some money from the bank and I paid an interest amounting to 500,000.
Yes.
So, and I had borrowed that money because of running my business.
Okay.
So the government and KRA will allow you to consider that one as an expense for the business.
Because you have to pay. It is a loan that you have to pay.
It is a loan that you have to pay.
Okay.
And you had borrowed this loan not for personal use, but for company.
Business. Okay.
Yes, for purposes of running your business.
Yes.
So you say net profit is 1 million.
Yeah.
Then you less the interest on that loan that you had borrowed that enabled you to do that business. So if you say 1 million less 500,000, you are left with 500,000. So that's when you will, the 500,000 is what now will be taxed at 30%.
Okay.
So if you say that percent of 500,000, that would be 30% of 500,000 should be you say it is 150 because you say that times 500,000. That is 150,000. So so you'll pay a tax of 150,000.
Yes.
But if you had not deducted that interest on loan, you would have paid 30% of 1 million, which is now 300,000.
Okay.
That's okay.
Yes.
So when you use borrowed money, you pay less taxes compared to when you use your own money.
Okay.
And of course, the lesser the tax that you pay, the more the profit
that you get.
That you get.
Yeah.
So basically, it is better to use borrowed money to fund your business than using your own money.
Okay.
Because of that element called tax shield.
Tax shield.
Yes. Okay. That the interest on the loan is tax deductible.
Okay.
I would want to actually take you through a hypothetical example.
Okay.
Yes.
Yeah.
That assuming you have received a tender, or you have won a tender from the government.
Yeah.
And the government requires you to supply so many bags of cement, and it will cost you about 5 million to undertake that project. And once you invest 5 million in that project, you will be able to bill the government 10 million.
Okay.
So you will invest 5 million, but you will generate
10 million.
10 million in terms of revenue for that project.
Yes.
So we want to discuss, if you decide to use your own money, what profit will you end up with?
Okay.
And in case you decide to borrow money, what profit will you end up with? Okay. So you have two options.
So I have won a tender.
Yes.
I have 10 million.
Yes.
In my bank account,
yes,
which I can 5 million.
5 million in your bank account,
which I can decide
either to use it and invest in this tender,
Or I can decide to go and take a loan.
Yes, and take a loan.
Okay.
And of course, when you decide to take a loan, it will not be a good idea that you take a loan of 5 million and you already have 5 million with you.
Okay.
So this 5 million you have, don't leave it in your bank account. Invest it. Okay. Maybe you buy a government bond, treasury bond, of 5 million, so that at the end of the year, this 5 million that you have, you will not invest in your business, but you will invest by buying treasury bonds.
Okay.
So that at the end of the year, this 5 million, if you invest it at a rate of 10% per annum, it will have generated an income of 500,000.
Yes.
That one is very key.
Yes.
And once we go through the example, we will have to consider it somewhere.
Okay.
So let me take you through the two options.
Okay.
The option number one, we have said that you have invested 5 million.
5 million, yeah.
And that 5 million will generate sales of 10 million. So option number one, sales is 10 million. Then the cost of that business is 5 million. And we said that the 5 million is what you will use to buy the many bags of cement. So at the end of the day, you will be left with a gross profit of 5 million.
5 million, yes.
For option number B, where now you have decided not to use your own money, but to borrow.
To borrow money, yeah.
So you borrow, you go to the bank and you borrow 5 million.
Yes.
And your 5 million you invest in treasury bonds.
Yes.
So at the end of the year, you will get a 10% return.
Yeah.
Okay. So let's use as it is indicated in the table that is appearing somewhere.
Yes.
Now, on side A, the gross profit is 5 million. On side B, you can see also the gross profit is 5 million.
Yeah.
Then that is gross profit. We don't pay taxes. We don't pay taxes on gross profit. We pay taxes on net profit.
Yes.
So let's continue to deduct any other cost, any other additional cost that was relevant for us to generate that income of 10 million. Okay. So perhaps you need to pay the rent, you need to pay for fuel, you need to pay for salaries, licenses for your business, insurance for your business. Let's give all those costs about 2 million.
Okay.
So you have 2 million.
Yes.
From gross profit, we less 2 million.
So 500 minus 2 million. 5 million minus
2 million. We are left with 3 million. That is for column A, and for column B, same thing apply. At this point, there is no difference between column A, where you are using your own money, and column B, where you are using
borrowed money
and investing your other 5 million.
Yes.
Now, so on column A, you have now deducted all the expenses that are related to that business venture. So the 3 million is net profit.
Yes.
That's the net profit is the one that you should pay taxes for. And the corporation tax rate in Kenya is at that percent. So you say
you pay that percent of
3 million, which is 900,000.
Yes.
So what will you be left with as your money?
2.1 million.
2.1 million.
As now my profit, my own money. Yeah.
It's called the net profit after taxes.
Okay.
And that is now your own money.
Yes.
Because the net profit is 3 million, less taxes, you have 2.1. Less taxes, which is 900 million, you have 2.1
million. Yes.
Now let's go to that other side where you had borrowed money.
Yeah.
We were up to the point when you deducted the operations cost, which were adding to 2 million, and you are left with a net profit of 3 million. At this point, there's one other extra cost that you need to deduct before you start paying taxes for your business.
Okay.
And this cost is the interest on the loan that you had borrowed.
Okay.
Remember, you had borrowed 5 million.
Yes.
And you had to pay the bank an interest of 10% for the borrowed money. 10% of 5 million is 500,000. So you say my net profit is 3 million, less this other cost of interest for the loan. So after deducting, I'll be left with 2.5 million.
Yes.
Now you will pay taxes on 2.5 million.
Okay.
This other person who had used his own money, he was paying taxes on 3 million.
3 million, because there were no other expenses.
There were no other expenses.
But for the one who borrowed,
there's interest expense.
Yeah.
Now, 2.5 million, 30% of 2.4 million is 750,000.
Okay.
Now that's what you'll pay to the government.
Okay.
750,000.
Okay.
This other person was paying to the government 900,000.
Yes.
You, because you have borrowed some money, you'll pay lesser tax.
Okay.
And so 2.5 million, that was your net profit. Less
750.
750.
Yes.
You are left with about 1,750,000.
Okay. No, that's the net profit.
That is the net profit after taxes.
1.75.
Yes. Okay. So at this point, the person who used his money is better than you, than the person who used his who borrowed money to fund this project.
Yes.
Because the person who used his own money, he has net profit after taxes of 2.1 million.
Yes.
But the person who borrowed money has reported a profit of 1.7 million.
Yes, yes.
But now there is a catch. Remember when we started, we said that this person had invested 5 million in the treasury bonds.
Yeah, yeah.
So the treasury bonds have also given him a return of 10%, which is 500,000.
Yeah.
So from now what we can see there, 1.75 million, add 0.5 million, which is 500,000, the return that he has received from investing in treasury bonds. So if you add that, he will now have a total net profit of 2,250,000, compared with that other person
with
2.1 million.
Okay.
And that's why, if now we consider it is one person who has this option, do you want to invest in option A or to invest in option B?
Yeah.
Option A, this is one person. You have this money with you.
Yes.
5 million. If you decide to use this money to run this project, you will end up with 2.1 million. But if you decide to borrow money,
and invest the 5 million in a government,
the money that the money that you have, you invest in treasury bonds. Then you are left with no money, but you still need to.
At the end of the day,
you still need to do this project. So you go to the bank and borrow 5 million. If you follow that option, you will end up with 2.25 million.
Okay. Yes.
Yes, so at the end of the day, you are
better than
yes. Option B is better.
Option B is better.
Yes.
Than option A.
And option A. So that's what we call tax avoidance.
Tax avoidance.
Yes, and tax avoidance is very legal. What is not legal is tax evasion. Tax evasion is now when you are not disclosing the income that your business is generating, so that you don't pay taxes. Tax evasion is illegal, but tax avoidance is very legal, and that's what you have just explained. Because, for instance, if you have the 5 million that we are talking about, I just want to explain something about tax avoidance.
Yes.
If you invest in government infrastructural bonds, the income that you get after investing on those bonds offered by the government, they are called infrastructural. They are usually for funding the infrastructure. Now, if you invest at 10%, the income that you receive from the government after investing that, you don't pay any taxes on that income because you have just done business with the government. It doesn't charge you any taxes. But if you invest in other bonds, corporate bonds, like now Centum are floating a bond, even Family Bank, if you decide to buy a bond, you can buy bonds from Family Bank or even EABL. They offer bonds. But now actually them, because they are riskier than the government, the rate of return for those corporate bonds is 12%.
Okay.
But now for this case, let's assume it is 10% and not 12%. Because I want to explain the concept of tax avoidance.
Evasion and avoidance.
Avoidance, yes, tax avoidance. If the government bond is giving you a rate of 10% and you will not pay taxes on that, and the corporate bonds is also giving, and corporate bonds are also giving you 10%, but you will pay taxes on that income that you will receive from investing in corporate bonds.
Yes, yes.
Which one would you invest in?
Of course, in the government.
In the government.
The one that it will not be charged for tax.
Yeah, for taxes.
Yeah.
No, that's what is called tax avoidance.
Avoidance. Okay.
You choose the option that will reduce the taxes that you are supposed to pay.
Okay.
You're not running away. You will disclose everything.
Yes.
Yes, but no evasion, you are running away.
You're running away. You're hiding yourself.
Yes. You are either reducing your actual income or you are exaggerating your expenses. Because when you reduce your income, you know.
Of course, you'll pay the small margin of tax.
Yes, yes.
Because you have reduced your net income.
Yeah, exactly. Always remember, taxes are paid on net profit. So what happens when you reduce your income? Does the net profit increase or does the net profit reduce? When you reduce your income, the net profit reduces. So that's what someone who wants to evade tax, that's what he wants to achieve.
Okay.
That's one way. The second way is to exaggerate his expenses.
Okay.
When you exaggerate your expenses, what will it do?
Reduce your net profit. And again, you'll pay a small margin of tax.
Exactly.
Okay, I get it. So we should avoid the tax evasion.
We should avoid tax evasion.
Okay.
But we should do tax avoidance.
Do you think it is fair that the government does not charge the borrowed money?
Yes, it's an incentive that the government considers the interest on borrowed money to be tax free.
Okay.
Or to be tax deductible. Because it understands that as long as you have borrowed this money for business purpose, then it should be considered as an expense for that business.
Because you will have to pay.
Yes.
Because it is money that you owe.
Yes.
An entity.
You owe an entity.
Okay.
But in this case,
yes,
someone might ask, why would you want to instead because someone might think that you had this 5 million and you don't want to use this money to fund your own project so that you can reduce your taxes. Someone might ask that. But even if you reduce your taxes, because you are benefiting from this interest on loan,
yes,
which you are deducting before you now compute your taxes, the 5 million that perhaps you have given to, the 5 million that perhaps you have invested in the corporate bonds of Centum or EABL or even Family Bank, because currently they are the ones who have floated their bonds, the 5 million you have invested in that company. Once those companies, of course, the level of profitability, for instance, if you have invested in Centum, will increase because of the money that you have injected in that business.
Yes.
And once the level of profitability of Centum increases, the government will get more taxes.
Yeah.
So you may avoid paying taxes in your own company, but you're also facilitating other companies to pay more taxes. So at the end of the day, I don't feel the government doesn't lose. You might pay lesser taxes in your company, but in Centum, where you have bought a bond of which they're offering at 12%, the level of profitability there increases, and the government taxes also increases. So it is fair.
It is fair.
So it is fair.
By the way, you have to prove to the government that you have borrowed the money. What if I have taken the money from you?
Or from a friend.
You as a friend.
Yes. It's very easy. Even if you have taken money from me,
yes,
you can prove to the government, because I will not just give you 5 million.
There will be
some documentation.
Okay.
It's called the loan agreement.
Yes.
So the loan agreement, you can show to the government that this money you have been, it is me who have given you the money, advanced you not given you the money, I've loaned you the money.
Yeah.
So in terms of the bank, again, there's documents that you can show to the government to tell them that this was not my money, and that's why I feel I deserve a 10% interest, 10%, I deserve to deduct that interest on loan,
Because
so that
it is
I
an
reduce
expense
it is
that
an
I-
expense for the business.
Okay. Do you have disadvantages of using borrowed money?
Yes, there are few disadvantages of using borrowed money.
Yes.
And one, of course, if your business is highly leveraged or highly indebted,
Okay.
highly indebted, you run a risk of becoming bankrupt.
Okay.
Because, for instance, if the national economic outlook changes, like that time of COVID,
Yeah.
and something shakes your business, you remember this is not your money. You have borrowed this money. So anything that might reduce your sales or your profitability,
Yes.
it will reduce your ability to repay the loan that you are obligated to repay. And if you are unable,
Yes.
then you're increasing the chances of you being auctioned. As opposed to when you are using your own money,
Yes.
if the worst that can happen is for you to
lose the money.
to lose the money,
Yeah.
to lose the money, as opposed to being auctioned.
Being auctioned, yeah.
Yes, as opposed to being auctioned.
Okay. That's fine. Thank you. I think it is now clear, and I have understood between using my own money or using borrowed money. Our viewers, I hope you have gotten something. I don't want to comment on that. Let us know your views. Give us your comments, and please do not forget to subscribe, share, and please press the notification bell. See you next time.